All right, and well, let's just actually get to Evercore's Mark Mahaney, who does cover Amazon as well as Meta, for his take on really what to expect and what your read-through is, Mark, on what we've gotten already in terms of the numbers.
Well, the read-through to Amazon, geez, it's kind of hard for it not to be viewed as positive or constructive. You look at up and down the line. So one company we haven't mentioned yet is eBay. eBay showed this acceleration in retail sales, so that should bode well for Amazon's retail numbers tonight. Advertising, that's a big business for Amazon now. It's 50 billion run rate or something like that, 60 billion. And the read-throughs from both Google and Meta were pretty strong. The growth rates are remaining robust. That's really the read-through from the beginning of the year. The growth rates in Q1 and Q2 were pretty similar if you adjust for comps and things like that. And there are high levels. You should see that from Amazon. And then finally, the read-through on the cloud side from both Azure and Google Cloud should be constructive. I mean, we should see some acceleration in this AWS print tonight. I don't know if it's a huge acceleration, but we should see the beginning of it, and the company should certainly be able to talk about it for the back half of the year.
I know, Mark, when we've spoken in the past, you've focused in part on what you call dislocated, value or dislocated growth stories. Doesn't seem like any of these qualify, right? And even Alphabet has obviously had some repair in terms of that stock performance and the story. So is everybody kind of now on board with the longer term trends, and are we in the process of pricing the good stuff in?
I think a lot of the good stuff is probably priced in, Mike. There's still dislocation, I'd argue, with Google, and I think you have a clearing event coming up if we're right about the judge's decision coming up next month. So you got a near-term catalyst if we're right about that. And it's still trading at a discount to the market. So I'm sorry, Google is still dislocated. I think Amazon is modestly dislocated and Uber a little bit dislocated too. So there's not that much dislocation. We're in the middle of a pretty big tech rally, 3-year tech rally. That leaves very few dislocation candidates right here. But, I still hunt for them, and I do find a few. There's a company, Duolingo, that I like. That's dislocated.
Okay. And then just when it comes to Amazon, in terms of your sense of investor thinking about the company, do they still bump a little bit on either tariff impact or in general things going on the e-commerce side?
Yeah, I don't know. I'm sorry. There's still these two overhangs on Amazon. I mean, look, if they print 17% or something less than 17% AWS growth, this stock will go back quickly and get dislocated. I think there's still some uncertainty. I mean, Azure has done a wonderful job proving that they're a winner of AI cloud services. AWS hasn't proven that. So if they prove that, there's more upside to the stock. And second is there's still this concern, it's the same concern that you have with Home Depot, with Walmart, and with Amazon, which is there's still these tariff risks. Look, costs are rising. Who's going to eat those costs remains to be seen, whether it's the consumer or the companies. And my guess is that Amazon's going to be much more willing to eat it than those costs than to pass it on to consumers, and that's going to ding their margins. Investors are still going to want that margin, like show me that chunky margin expansion path out of Amazon. And if they don't get it in the back half of the year, that's still that would also be a negative. So there's still some issues here for Amazon that, if they are correctly addressed, creates a lot of upside for the stock from here.